What's going on, everybody? It's Jeff here. Welcome back to the channel. All right, it's Sunday and it is time to talk about everything that is happening the week ahead. We're going to talk about a few events that investors are going to be keeping a really close eye on to give them some sort of direction on where the market is headed. We're going to talk about exactly what those are, what the positive catalyst could be, as well as the negative catalyst, and then we'll go over a few plays that I will be watching very closely. Lastly, I want to talk about the sentiment that I feel that is going on with AMC and just give you a nice update. So let's get right into it. First off, the Fed is going to be meeting this week for their annual symposium. It's normally held in Jackson Hole, but it will be virtual. This title says it all. The Fed officials will seek to avoid a tantrum as they keep the taper talk going at key summit. Now, last Thursday when the Fed minutes were released, they had hinted that the asset tapering would begin a little bit earlier than expected, or just that they're starting to talk about it beginning. Investors got a little bit of a spook. However, like I said, it wasn't really new news because the Fed has talked about the asset tapering for many months now. However, the market kind of pulled back and began to rip up, but it's something they're going to be keeping a very close eye on. So how does that affect you? Well, let's take a look at this second point right here. The Fed could keep tensions in markets running high after stocks reacted negatively to the Fed minutes. Housing data is also highlighted of the week. The Federal Reserve's efforts to reserve its easy policy will be a dominant theme for markets in the week ahead as central bankers meet virtually for a key annual summit. So basically expect some choppiness happening inside the market. If you take a look at where the SPY is sitting, it didn't really retrace to that 50-day moving average. Look for the pattern to continue. This is on the daily chart. Once you start to see a little bit of a break of pattern, we might be able to identify that this trend has now been broken. Another one I'm going to keep a very close eye on is the VIX, ticker symbol VIX. Now, I know some of you are not able to trade options for the VIX depending on the brokerage, but it's still a very good indicator just to keep an eye on. As you can see, this slow downtrend of the lower lows look like it's starting to kind of peel back up. Right now it's sitting about the 1856 mark. Anything over 20 really has a little bit of effect in the market. As you can see, the spike happening when the fears are high and the VIX is ripping. Normally the SPY tends to pull back. That's when the tensions get really high and investors get a little bit worried. So just keep an eye on that going forward. If you are able to play the VIX options, it's always a great idea to be able, to take out a small hedge position in case your portfolio takes a little bit of a hit. We played a position last week. It was the $19 call that absolutely crushed it because we hit up almost about $24. So that was a monstrous play. If you're just a long-term investor and you're not into the day trades or swing trades, a solid stock like AMD that has had a massive rip up is starting to sell off. Expect when the markets begin to be a little bit frothy, expect AMD to pull back a little bit more. This is a solid company going forward. I have full faith, especially because the chip shortage is slowly starting to kind of get handled, and AMD will highly benefit once that happens. So just keep an eye on for any quality, good value stocks. If you have cash on the side and you're looking to buy at a good opportunity, so just keep that in mind. But let me get back to this article. You can go look this up. It's on CNBC. Something that they had pointed out, which is really good on here. It tells you everything that's happening the weeks ahead. Couple things that I had highlighted were, one, the home sales, give a new housing update, as that will directly affect the market if there's any bit of shakiness happening in the housing market, as well as Thursday, the jobless claims is going to be released. So just keeping an eye on it and just starting to keep, pay attention. If you're new to investing and you're solely looking at charts or solely looking at tickers, one thing that I talk about all the time is market sentiment. I always turn on, a couple different, news channels in the morning just to see how the market's feeling. What's the vibe I'm getting? What are they talking about it? What are their fears? And after doing it for so long, kind of just having it play in the background, it kind of gives me a good idea of exactly where the market could be headed in the day and week ahead. So just to start to keep an eye on that if you're new to investing, and taking a look at these exact events will be really beneficial for you. Now let's get into AMC. I want to jump over to the daily chart just to take a look at exactly where it is sitting. It is still traveling in this same channel, and it has really looked like this is some decent consolidation forming in here. The channel is getting a little bit tighter. One thing I want to point out is this from Fintel. And we've talked about the 13F filings. I've covered Market Beat a few times and shows that institutional buyers are still piling into this. But take a look at this ownership score. It's something that I see, I look at, but I feel like I never talk about in the videos. Is it sitting at a 99.32? That number has consistently climbed as institutions continue to pile into AMC. If you look at all of these recent ones that were just on Friday, even on Wednesday and Thursday, still a lot of buying pressure coming in for AMC, especially because it has retraced. It seems like it's found a bit of a bottom, sitting around that $32 level. And the hedge funds, the big guys, the institutions that are not short against AMC are looking for another leg up. As you can see, as it ripped right up in here, there's a lot of buying pressure going on in here, which led to some of this. It began to kind of, sell off. The shorting was increased. And that's when you're seeing this nice consolidation looking for another leg up. And everything that I have seen over this weekend has just given, like I talk about that market sentiment and the sentiment around AMC, is that we are poised for another bullish rally. If they wanted to rip this back down, it would have been. But as soon as we get to that base level, the buying pressure just gets accelerated and accelerated and accelerated. So I wanted to point, like I said, I wanted to point that out because I never cover this. But if you look at, there's only, 79 other stocks out of over 124,000 that have this amount of institutional ownership. Okay. Now I know some of you are thinking to yourself right now, oh, well, the institutions loan out these shares to be shorted. And there are some institutions that do that. And we're not going to be able to change it. That's how the markets are set up to run as of right now. But you better believe that a lot of these large institutions and other hedge funds, they're competing with each other. So if a hedge fund is short and they're looking to accumulate assets from them, they bet against them and they don't want to work together. There are some partners, of course, just like in every other business, restaurants that are close together, but inevitably they are competitors with each other. So there are plenty of them that do not want to loan out. And like I said, it is a very bullish, sentiment towards AMC. So guys, that's going to be it for this video. I'll keep you posted on the week ahead. If you are interested in learning more about the stock market, first link in the description. We've got tons of training from just regular stocks, options, as well as I give my pre-market plays every single morning, and we've been absolutely crushing it. So that's it for this one. I'll see you in the next one.